Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. This week, two things have really hit me. The first is that share buybacks among the FANGs have reached a clear majority of the company. Every FANG, except Amazon and Tesla, are engaged in the practice, although for a couple of the FANGs, their buyback ratios are quite modest. In other words, these companies are no longer investing in growth. The other thing that is glaring is that much of the market reaction to the quarterly numbers is based on convincing, or conning, I'm not sure which, the analysts into lowballing the quarterly estimates so the companies can show an apparent beat against the analyst estimates, despite essentially weak reported numbers. This is a far cry from the halcyon days of rapid and powerful growth, and should serve to force you to keep in mind that these trees are no longer growing to the skies, but are now showing clear signs of aging. So far, the market appears to love the resulting enthusiasm, but we have to be aware that the underlying values are fading, not soaring as they once did. It may not be fraud, but in my mind, it's close to it. Now, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Let's start off with Meta, which simply continues to soar very nicely. I think that Zuckerberg is on track to get that earnings level and earnings trend back. Certainly, the first quarter, I think, would seem to underline that. And if so, then we have to say that there's I think, a very clear possibility with the breakout over the super growth price. That's 4.5 times book, that it can get to the mid super growth price. That's 5.5 times book, and that's about 23% higher than here. But we also have to assign some probability that it can actually get back up to its triple top at its bubble price. NVIDIA continues to hover just above its HB5 price. And given, I think, this trend in this company to stock buybacks, what we may find when we actually have the balance sheet for the company for the first quarter, we may find that HB5 price has actually come down a little bit, and we may find that the company is heading right back up to its HB6, which is 33 times book value and a 23-year valuation high. Apple, well, you know, when you look at Apple sort of in the raw, as it were, what do we see? Well, this is a 5-year picture of the stock. Well, we see a company whose balance sheet has been fading for some period of time, and whose earnings trend, it's all right, but it's not terribly exciting. So why is the company way up here at 28 times its book value? Well, let's take another look at the stock. When I click on that price to book button, and we see what's really going on here is that the return on equity of the stock has been rising steadily, and with that, so has the valuation. Now, very recently, it's been heading sharply down, but we know that we haven't factored in the first quarter balance sheet, which we know has been with heavy share buybacks, and the company is indicating that it's going to buy back another 90 billion. So I think that what we're going to see is that ROE trend is going to continue to rise, and it'll be interesting to see what impact it has on the valuation in price to book terms. But I think it will tend to be positive. Microsoft not only had a good quarter, but appears, I think, very much to be in full control in the cloud space, as it were. I hadn't expected the stock to be quite this strong, and possibility we might see an increase to its HB2. But right now I have to say that what I see here is some indecisive trading. I'll be interested to follow Microsoft. For the time being, I think, though, you probably have to hold. Alphabet, Alphabet's numbers, they were only up 3% year over year. Now, the company has promised that they're going to buy back some $70 billion of stock, but that really is a drop in the bucket compared to its total equity. And it looks very much to me as if the stock is stalling out, preparatory, I think, to a pullback to its LSG price, 4.5 times book, and maybe lower. Amazon, when you look at Amazon, the recent action, it looks very much as if the investors were kind of hoping that there was going to be a really good first quarter, and they sort of bid the price of the stock up almost to the bubble price. Had it been a good quarter, I bet that the stock would have jumped over, but it wasn't. And in fact, it was very pedestrian, and the stock is now fading again. My downside target of the MSG price remains, I think, very much in place. Netflix, an okay quarter, but what are we seeing here? We're seeing a beautiful bounce off its mid-super growth price, but it's running out of gas, and I think not surprisingly so. I think our MSG price is coming back into pretty clear focus. And finally, Tesla, well, after a period of very indecisive trading, in and around its HB2 price, which is 12 times book value, the stock so far has let go one breakpoint, which it hit with precision and is rebounding from here. My long-term experience with stocks that exhibit indecisive trading is that a one breakpoint setback is often not enough, and we may be looking potentially down the road at a pullback to the bubble price. But so far, the HB1 9.5 times book is holding. Now, to sum things up, let's start with the buy-hold camp. First and foremost, Meta has knocked it out of the ballpark, as Zuckerberg has promised. The stock is comfortably above its low super growth price, 4.5 times book, and heading for at least its MSG price, 23% higher than today, but quite possibly its bubble price, which is 7.4 times book. That maximum, which would be 60% higher. Now, let's not get too far ahead of ourselves, but I suspect that this is a solid probability. Second, Netflix continues to ride its HB5 price, that's 26 times book, where it's been holding nicely, and could be heading back to its HB6 or 33 times, its all-time high. The stock needs to hold above this level, but so far so good. The company, incidentally, joined the FANGs, which were buying back stock last year, as we have seen from the current balance sheet, and continues to do so. Third, the new balance sheet for Apple will be uploaded as soon as our data provider allows. For the moment, I have to observe that Apple's numbers were weak, were down in every category but one, which was beating analysts' estimates. And that's all that Apple needed to do to hold up its stock. Oh, that plus buying back another $90 billion of stock. There are three uncertain stocks. Alphabet reported first quarter revenue up a very modest 3%, but above analysts' predictions. They too are promising to buy back $70 billion of stock, but that's only 3% of their total equity. So the impact will not be as profound as, say, those buybacks are having on Apple. And the stock, so far, has not greeted the announcement with much enthusiasm, I have to observe. Amazon disappointed investors due to a slowing revenue growth for its Amazon Web Services. The company is mired in single-digit sales growth and is coming off its weakest year for expansion in a quarter century as a public company. I suspect that the stock will head back to its MSG price, and maybe that's at least. Microsoft beat its sales and earnings expectations. It certainly looks very much as if its AI applications are industry leading, and the Microsoft cloud powerhouse is in motion, swamping both the efforts of both Alphabet and Amazon. Finally, I've got 2 sells on my FANG list. Netflix management is trying to put a good spin on its growth outlook, but it's apparent that the stock market is not entirely buying their story. I am maintaining my sell rating on the stock, and we will see what happens when the shares test that MSG price low, which I still fully expect. Looking at Tesla, after some weeks of indecisive trading around their HB2 price, the stock let go and has dropped 1 breakpoint, or 23%. What the company has going for it is longevity. It's got a very strong balance sheet. But you can only float along on your electric vehicle founding reputation for so long. Right now, you're paying a lot for growth based on a wing and a prayer. I will finish off by reminding you that unless or until the Standard & Poor's is actually able to break out over its super growth price, or 3.5 times book, which is very near at hand, I would treat any exposure to the NASDAQ stocks with considerable caution. And please keep in mind that the NASDAQ 100 must confirm any breakout by the Standard & Poor's. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.